Wish all the investors a very happy new year. In 2021, equity markets weathered a number of challenges along the way, like rapid spurt in COVID cases, supply chain disruption, and evergrande debt crisis, to name a few. However, the situation improved globally as governments announced relief packages to deal with COVID-related disruption, and the vaccination also gathered pace. In India, we saw a slew of reforms, strong corporate earnings growth, and rapid participation in primary market. Reflecting this, Indian markets performed very well in 2021, recording gains of 22% in US dollar terms, touching an all-time high in October. Mid-cap and small-cap indices outperformed leading benchmark indices with gains of 46% and 59% respectively. On net balance, CY21 was a great year for investors from return perspective. We think 2022 would be the first year of normalization post-pandemic. Hence, we would expect it to be a tale of two halves. In the first half, I would expect markets to digest the pace of policy normalization, along with the Omicron issue and the stickiness of inflation. Hence, would expect it to be volatile. In the second half, I would expect markets to respond to earnings direction as the economic recovery unfolds. Overall, we are constructive on equities in 2022, but should be prepared for higher volatility ahead. Based on our analysis of capex intentions of corporate sector, we believe India could witness a strong capex cycle over the next 2 to 3 years, something that we haven't seen since demonetization times. Also, the structural reforms by Indian government over the last 2 to 3 years could potentially increase India's GDP growth by a percentage or two over the medium term. Hence, we think economy-facing sectors like select financials, industrials, and indirect plays on real estate are fertile hunting grounds for us. On the other hand, sectors that are less favorites include consumer staples and utilities. We are constructive on mid and small caps over the medium term. However, the valuation differential that existed between large and mid and small caps has normalized over the last 12 to 18 months. Going forward, we believe movements will likely be stock specific and follow the earning downgrade cycle or upgrade cycle of stocks closely. As a share class, they continue to be a strong source of wealth creation for investors from a 3 to 5 year perspective, and hence deserves a meaningful part of investors' asset allocation. Amongst the themes that we are betting on for the medium term are, first of all, private consumption demand. Second, private sector investment demand. Third, government growth scheme beneficiaries. Fourth, consumer companies with pricing power. And finally, China +1 beneficiaries. We think these themes could be strong, potent themes for wealth creation over the medium term. We think investors should pay close attention to their preferred asset allocation that is commensurate with their return objective. From CY22 perspective, we think they should focus on bottom-up themes rather than macro themes to generate returns. Happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.